Welcome back, folks. You are looking at a chart of gold on a 5-minute chart, and I want to walk through a very easy trade setup. I almost refer to this as free cash, okay? It is actually that easy. It's all about identifying the setup, okay? So let me just move this out of the way. Now, let's have a look at this. So let's have a look at what's happened yesterday, and it's very easy to identify, okay? You're going to get this in the next 5 to 10 minutes as I walk you through this setup, okay? So this is yesterday's low. Today's Wednesday, okay? I say today's Wednesday because I consider Asia to be the first session of the day, although it's Tuesday night in the US, okay? But I classify Asia as the first session of the day. Now, for me, I'm in Sydney, so it is the next day for me. But this is basically the Asia session, but this applies to any session, okay? Any session. So here is yesterday's low, okay? This is the New York session, and we've got a low here, okay? New York has come down. At the end of New York, we're at this low, and New York has moved up, right? Overnight session, we've moved up, and we have come down, okay? So the way that you look at this, okay, the market is moving down, okay, overnight. We're moving down from the overnight session, and this is where the market's opened, okay? So this is a setup that is easily identifiable because the market opens here, okay? This is prior to the Asia official opening time, okay? So the official opening time of Asia is 8 p.m. So this is 1 hour prior to the Asia session open. Now, typically, as I've said before, the hour prior to the open of a session, okay, is going to be that manipulation, right? So for example, London, 1 a.m., there's typically a manipulation, okay? So this is all Asia, 7 a.m. to 8 a.m., okay? But what's it reaching for? It's reaching for the low of the day before, okay? Or the low of the previous session, you could say. But I classify a new day when Asia opens up, okay? Now, you don't have to guess that this is going to take out the low of the day. You can look for the setup. What do we have here? Okay, so if I see a low, right, a previous low on the chart, and we've got Asia just opening up, okay, high probability we're going to take out that low, okay? Now let me show you, I've already marked this out on my plan. As you know, I have a trading plan. Let me show you what my trading plan said. Okay, this was way before the market even opened up. So already in my plan, I've marked out what I'm expecting. A sweep of the low of the previous day. That's actually the low of Asia session. This is the overnight trading, but I consider Asia a new day, okay? So here's what I'm thinking, and that's where I'm targeting, okay? And I've said for my own notes what I want to see, okay? So if we go back to the charts, you can see we have come down and we have swept those lows, and we are starting to move higher, okay? Now, I'm talking about this move down here, okay? If you look at this move, this pre-market move from that entry down to there is more than 50 pips, okay? That's 60 pips, right? So your job now, looking at that Asia's opening up here or pre-market, there's a low here. What do you need to see to go short and take 50 pips out of that move? Well, you have this bearish order block, okay? You have displacement. Inside of there, you've got your bearish breaker, okay? This is the breaking structure. You've gone down. These two candles go down with gaps, and this candle, this is the 5-minute chart, goes up into the bearish breaker. You're short right there, okay? You're short right there. So we're not guessing anything. We have seen a bearish signature with displacement. We know there's a previous low there. Higher probability we are going to tap into that low. So you take your entry on the move back up into this bearish breaker and this fair value gap, okay? And your target is simply the low here. So there's your entry, move back up down to there, and you can take 50 pips easily from that move, right? You've got access to 68 pips on that move down, okay? So you'll see this over and over again on any particular day where the market has made a low, has moved up on the overnight session, and then Asia is opening up pre-market. You just look for your bearish pattern. There's your bearish signature. Your bearish order blocks are these two up candles, okay? Those two up candles become validated as the bearish order block when you have a close below those two up candles with displacement. Nice big down candle, another big down candle, gaps, okay? And then it's very high probable when you have these two down candles, this is a swing low, okay, prior to these up candles. So that, therefore, that last down candle is your bearish breaker. So if you're going down below a swing low, it's breaking market structure on this 1-minute time frame, okay? And then you can just pull back into your bearish breaker. We're not expecting the market to go above the bearish breaker. It can, but we're not expecting it. So our entry is immediately when we get to this candle, okay? And your target's back down to this low. Such an easy setup. I've seen it over and over again. I call it the free cash setup because high probability when you see this pattern, right? You've got a bearish signature with displacement, breaker structure, back up into the bearish order block. When you have a previous daily low, then high probability you're going to take that out, even if you're bearish or bullish. Because if you're bearish, it's going to go down there. If you're bullish, it's also going to go down there to sweep that low and to go up. That's why it's higher probable. But I'm not saying you have to guess. I'm not saying that just because you've got a low there, you're going to go short. That's not what I'm saying here, okay? You've got to have your confirmation. Your confirmation is this pattern here. That's what I'm teaching you in this video, okay? That exact pattern right there, okay? The bearish Order blocks that go up, the validation when you get the displacement down, and this down candle, which is part of that swing low. When that's broken with these two down candles, okay, you're going to expect repricing lower when you get this pushback up into this bearish breaker, and you're targeting the low of the previous day. The beauty with this is that regardless of your directional bias, whether you are bullish or bearish, it doesn't matter. If you get this pattern, it's high probability that you're going to tap out these lows. Okay, doesn't mean it's going to work every single time, but that's a high probability setup. Okay, so go and rewind the video and look at the pattern that I've described. Look at it on your own chart so you can implant it into your mind, so you know what to expect price to do the next time you see this. You have a low, previous day low, price is up here. We haven't tapped into that previous day low yet. You get the one, if you're doing this at the start of the day, at the start of the Asia session, okay, then it's going to occur in that. Well, it doesn't have to occur in the hour prior to the Asia session, but as soon as you see that pattern inside of a session, whether it's the hour prior or within the actual session itself, then you can identify that as a setup, and you can, with high probability, expect pricing to be repriced lower after you get the confirmation, okay, into the bearish breaker. You may not always have the bearish breaker. It could just be a bearish order block. So long as you have the displacement, okay, with these gaps moving down through those two up candles, and if it's just the bearish order blocks, then your move up needs to come into at least that first bearish order block, okay, or into the gap, okay. Hope it makes sense. I will now talk with you in a future video.